Hello and welcome to our third podcast today. My name is Michaela Zander and I'm Commercial Manager in the Tax Technology Department at Meridian. Meridian Global Services is a company that has been active in the field of VAT for over 30 years. Today, Marius Kitschan and I want to talk about the challenge of developing a convincing business case in the context of automating tax determination in SAP systems. This is particularly challenging in the case of VAT as an indirect tax, as it harbors many risks. As a tax consultant specializing in tax technology and managing director of VAT Consulting GmbH, Marius is the ideal person to guide us through this complex topic. And his company advises on implementation projects for tax determination solutions, among other things. Hello, Marius. You're very welcome.
Hello, Michaela. Thank you for having me.
We will also be seeing each other shortly at the round table organized by Meridian in Munich on Wednesday, the 28th of February, where your colleague Christian Odendahl will also be speaking on this topic. We are already very excited and are also looking forward to Meridian's client, the Mahle Group, reporting on their experiences with our add-on. Topics such as SAP strategy and e-invoicing will also be on the agenda. But back to our business case today. What is your experience, Marius? How should tax departments approach such a business case?
Yes, it is important to understand that every company has individual requirements for a business case. Expectations within the company, especially at C-level, are often decisive as this is where the budget is allocated. Companies that have just experienced a major compliance breach or come from a highly regulated industry often see the added value in such investments. For companies that are more focused on return on investment, the hoped for benefits must be evaluated particularly carefully. In this respect, the situation for a tax department to get such a project approved can be very different.
This is an important aspect. Let me briefly explain how an automated text determination solution in SAP works. These solutions, like Meridians, utilize various data such as text departure, text destination, CTC, MTC, and relevant parameters to automatically determine the correct VAT rate for each transaction. This determination process is flexible in the way it can be set up and must allow dynamic text determination. Automated text determination simplifies processes, increases accuracy, and minimizes compliance risks. Ultimately, this achieves three goals: control, transparency, also meaning visibility, and efficiency.
These advantages should not be underestimated, especially in VAT, as we are talking about mass processes here.
What advantages do you see exactly at this point, and how can these be evaluated and, in particular, quantified?
Experience has shown that the time savings are often easy to realize. This applies to accounting and tax department processes. Added to this are the cost savings from external consultancy assignments. There may also be attributable additional results from past tax audits and penalties based on the incorrect assessments. These can be projected into the future accordingly.
That seems to be the easier part. And what other advantages in terms of quality might need to be considered?
From a qualitative point of view, many aspects of the company are developing positively as a result. I see at least three major areas. First, for the tax department, it is certainly important that the business has a secure framework. And the business is certainly also happy not to get into an inquiry loop with the tax department every time, but can rely on the process itself. That saves time and nerves. Second, from a risk management perspective, automated tax determination is an investment in the tax control framework. The improved control ultimately reduces the net risk. This may make manual checks superfluous, for example, when preparing the advanced VAT return. Of course, The accounting and tax departments will also be pleased. And third, what is perhaps not mentioned often enough are the general quality improvements in the company processes. This can often be seen in the master data or in the ERP processes that are scrutinized. For example, how a sales order is set up or how it supports billing maturity in the context of e-invoicing so that live reporting does not become a problem. In addition, there are also positive aspects to the relationship with the tax authorities, not to mention the customer, as the company regularly acts more consistently and is able to provide more information. In addition to this, there are certainly also very individual points that differ from company to company.
Very interesting. What final advice would you give to companies considering an automation solution or a tax engine?
Companies must recognize the individual expectations of the decision makers in order to create a successful business case. This means that they should be asked in advance. The corresponding requirements for the business case can be derived from this, and the tax department should not shy away from listing the qualitative aspects that are difficult to measure at first. Although the financial aspect always plays an important role, we are increasingly seeing that the points that are difficult to assess are slowly receiving more attention.
In addition, you can reverse our initial question and ask what it costs the company to do without any automation or software support.
You're right about that. If the discussion allows, we will have this conversation with the clients. In my opinion, not every company makes the honest comparison between introducing and not introducing automated tax determination. If I want to achieve the same level of security, I have to invest in the tax department and accounting. That means increasing staff. We are certainly seeing how expensive this can be in the discussion about the shortage of skilled labor. Non-implementation can also lead to restrictions in the permitted business cases if the business simply cannot be supported quickly enough and securely enough. Reporting processes become more complex due to a lack of preventative controls. All of these are also cost items that the company shall offset as saved expenses. In this respect, the recommendation can only be to include this idea in the business case.
At this point, we would like to mention that we are also happy to answer any questions and discuss the topic in more detail. Also, we would like to invite you again to come to our roundtable at the 28th of February in Munich, where we will dive into this topic in more detail. Thank you, Marius, for these insights.
You're welcome, Michaela. It was a pleasure.
That was our podcast today on the topic of business case for automated tax determination solutions in SAP. Thank you for listening, and we look forward to the next time. See you again soon.